Welcome to TalkTickers, where we break down the earnings calls that are really moving the markets. And today, we're digging into UHAL's latest quarter, and wow, it is a fascinating one. Get this, the company reported a massive miss on profits, yet the stock actually went up. So what in the world did Wall Street see that the headline numbers didn't? Let's get into it. All right, we're going to tackle this in three parts. First, we'll break down that earnings mismatch, that really weird disconnect between their revenue and their profit. Then we are going to unpack the U-Box growth story, because that's what has investors so fired up. And finally, we'll look ahead to the next call, and I'll give you our official rating on the stock. So let's start with the big puzzle from this quarter. On one hand, U-Haul's revenue, it's growing, looking pretty healthy, but its profits, they're falling off a cliff. So how can both of those things possibly be true at the same time? This is the million-dollar question, right? This is what everyone was scratching their heads about after the call. I mean, earnings per share, that's the key profit metric, it dropped from over $1 last year all the way down to just 73 cents. That is a huge, huge drop. So why on earth would investors reward that with a higher stock price? It just doesn't make sense on the surface. And just look at this disconnect right here. On one side, a monster miss on earnings per share. Analysts were looking for a $1.21, but U-Haul only delivered 73 cents. Ouch. But then you look at the other side, and they actually beat their revenue expectations. So you can see plenty of money is coming in the front door, but it's just disappearing before it ever hits the bottom line. So where's it going?
Well, here's your answer. This is where the profit vanished. Two big things: fleet depreciation and disposal losses. Together, they just wiped out 33 cents of earnings per share. Now, in simple terms, this means U-Haul is taking a big financial hit on its older trucks. The vans they bought a few years back are losing value faster than they planned, and when they go to sell them, they're getting less money than what they're worth on the books.
But here's the thing. While that profit story was pretty grim, the revenue side of things was actually really solid right across the board. The classic truck rental business, it grew over 4%. Self-storage was up a very, very healthy 8.6%. But look at that last bar. Other revenue. It shot up over 15%. And hiding inside that number, well, that's the real story that investors were latching onto. And that right there brings us to the U-Box growth story. This is the whole reason for the market's optimism. You see, investors were totally willing to look past that short-term pain from depreciation because they see this massive growth engine being built for the company's future. And this is the quote that absolutely lit up the earnings call. The vice chairman, Sam Schoen, he laid out this incredible vision where their portable storage container business, U-Box, could one day be as big as the entire traditional U-Haul truck rental business. I mean, that is such a bold, ambitious statement. It completely reframes what this company could become long-term.
And you know what? The numbers are there to back up the hype. U-Box revenue just surged 16%. The number of one-way moves is actually growing faster than their traditional truck rentals. That shows you it's a totally separate, powerful growth driver. And get this, U-Box is only set up in about half of their own stores. So there is a huge, clear runway for more expansion. Management basically said customers are just now starting to figure this thing out. The market is in its infancy.
Now, U-Haul isn't just talking about growth. They are putting their money where their mouth is, and they're doing it in a really balanced way. They poured a massive $585 million into new rental equipment this quarter alone, just to keep their main business strong and healthy. And at the exact same time, they invested nearly $300 million into real estate and new warehouses, specifically to build out the backbone for that explosive U-Box growth. So this is a company that's investing heavily in both its present and its future. Okay, so that brings us to our final section, the next call. We've seen the profit problems, and we've seen the incredible growth story. So how do we put all that together and figure out what's coming next? So here's our forward outlook. First, expect those depreciation costs to stick around for a little while, which is going to keep pressure on earnings. Second, you're going to want to circle August 21st on your calendar. That is their investor meeting, and it's where we're going to get some crucial updates and guidance. And finally, the whole long-term story really just boils down to one simple test.
Can they actually pull off this massive U-box vision? So, for our official Q2 prediction, we think you're going to see the same pattern. Revenue will keep chugging along, but profits are going to feel the squeeze from those fleet costs. The stock price? It's all going to hang on what management says at that August 21st investor meeting. The market is desperate to hear a clear plan for managing those costs and to see some hard numbers on just how fast U-box is growing. So all of this brings us to our final rating for U-Haul stock. We're calling it a market perform. Look, the U-box growth story is incredibly compelling. It offers massive long-term upside. But the profitability challenges from the fleet are very real and they're significant. It's this balance, this tug-of-war between the future potential and the current headwinds that keeps it from getting an outperform rating from us. For now.
And that's our take on U-Haul's quarter. As always, remember, this is not financial advice.